For individual returns, the ACA is mostly about two things: marketplace coverage and tax credits. The employer side is a different world. Large employers still have reporting and penalty rules. On the EA exam, they'll try to mix these up. Your job is to stay in the individual lane. Did the taxpayer buy coverage through the marketplace? And do we need to deal with the premium tax credit reconciliation? The individual mandate penalty is permanently reduced to zero. So if someone had no health coverage, you're not calculating a federal penalty anymore. But don't let that fool you. Marketplace rules are still alive. If a taxpayer had marketplace coverage, you still may have to reconcile advanced premium tax credit payments on the return. That's where exam questions live now. The premium tax credit, or PTC, is designed to subsidize marketplace insurance costs for eligible taxpayers. Many people take it in advance during the year to lower monthly premiums. Then the tax return is where you square it up. Either they get more credit, or they have to pay back some excess advance credit. On the EA exam, they love the phrase, reconcile the credit. Now the documents. If you see Form 1095A, that's the big one for individual tax prep. It means marketplace coverage, and it's used to compute and reconcile the PTC. Form 1095B generally shows health coverage from a non-marketplace source. Form 1095C usually comes from an applicable large employer and reflects an offer of coverage, and sometimes actual enrollment if self-insured. A taxpayer can get more than one 1095 in the same year. A common pattern is marketplace early in the year, then a new job mid-year with employer coverage. That can create a partial year PTC situation. In prep, you're matching months of marketplace enrollment to the 1095A, and you're watching for other coverage that could make them ineligible for PTC for certain months. One more trap. People hear ACA was repealed. It wasn't. Two major ACA-related taxes still exist: the additional Medicare tax and the net investment income tax. They're not based on having insurance, but they are ACA-era provisions the IRS still administers. On the EA exam, this is a favorite "what still applies" question. Businesses that employ more than how many full-time equivalent employees are required to report to the IRS about the health insurance offered to their employees? The choices include 10, 25, 50, or 100 employees. Think about the ACA definition of an applicable large employer and the reporting threshold. The correct answer is 50 employees. Employers with 50 or more full-time employees, including full-time equivalents, are generally subject to the ACA employer reporting rules. A tempting wrong answer is 100 because it sounds like a large employer, but the exam threshold you memorize is 50. Danielle is single with no dependents. She enrolled through the marketplace for 2023 starting January 1st. On July 14th, she joined the Army and became eligible for government-sponsored coverage, so she canceled marketplace coverage at the end of July. For what period can Danielle claim the premium tax credit, assuming she otherwise qualifies? Options include the whole year, January through June, not eligible, or January through July. Think about which months she was actually enrolled in marketplace coverage. The correct answer is January through July. She had marketplace coverage through the end of July, so those months can potentially generate PTC. The tempting wrong answer is January through June, because she became eligible for other coverage in mid-July, but she didn't end marketplace coverage until the end of July, so July still counts for marketplace enrollment.